Great. So, good morning, everyone. Again, I hope you had a great weekend. Whoop. And ready for this week. I think that we'll have a pretty interesting week. You better be on your A game because not sure it will be an easy one. So we'll try to navigate that the best we can. Um, and yeah, let's start with looking at this first. All right. Great. So, all right, let's backtrack a bit. The market made that new high, and then last week pulled back hard into the 10-week moving average structure. So right now, we can say we cannot say that we're in big trouble in larger correction. That's not where we are at all. We're really still in a longer uptrend. I want that to be clear this morning. Sometimes you might understand me as being defensive, but I don't want that to sound like I'm bearish. All right. Uh, I remain engaged on the long side. There's no doubt about it. Uh, but I think that this week, from a shorter term perspective, at least for me, I need more information as to why, what the market will do. And more importantly, we'll, we'll wait, I'll wait to see if we can form some good risk reward entries, not just in the stocks, but more importantly for the market itself. So uh, let's switch back to the daily. So yeah, last week we broke below the 21 DMA structure, and let's take the QQQE because that's what I use for my trading decisions, right? So April's pretty deep correction. We had a beautiful uptrend, small digestion during the summer, so August and September. And then we had another breakout. And now it seems that we're trading in a base, a range, right? Uh, so we were not able to really push forward on that breakout, and I think that we had some weight from the government shutdown and all sort of things, but I don't use that in my trading anyway. All I know is we were not able to continue that trend as we broke below the 21 DMA structure, and for me that's kind of a red flag. Not saying that we'll start a correction again, but maybe it's just that we need further consolidation, further sideway action to digest the recent uptrend. And that's not bad. That's very constructive. That's needed in any uptrend. Uh, but if you don't play that right, then it can really chop you up and create a big drawdown uh, because your win rate will be very low. The market will pop a couple days and then stop you out, reset up again and stop you out again. That can be a nightmare. So you want to play that very tactically, and that's what I will look to do. So, like I said, break of the 21 DMA structure, and instead of resetting up pretty quickly, uh, we had that retest. So I always look at those price action around the 21 DMA structure, right? That's what I do. So we had the breakdown, And then the initial reaction was to retest that now declining 21 DMA structure. And what we do next is very important. Do we form a higher low? Do we reclaim and then we wait for the back test? Or do we roll over and make a new low? And that's what we made last week. And that's why I went to cash, and that's why I'm just waiting for more information before engaging again. So we now have a proper kind of double bottom in the range, in the base structure. So as long as we hold that Friday's low, I think that remains pretty constructive to maybe just base for a couple weeks as we go through inside that base and maybe set up for the end of the year or something like that. I don't know what will happen. Again, we can V-shape recovery and make a new high this week. We can roll over and make a new low and start a new downtrend this week as well. So that's why I want to see more information as to how we will react to that 21 DMA structure retest. So yeah, we're gapping up. There was that government shutdown news over the weekend. So futures are up 1.5% on NASDAQ and a bit less than 1% on the SPY, the S&P 500. So QQQE is around 1.5% from the 21 DMA structure. So we'll have to see if Brett is good. We should open right in that 21 DMA structure area. And that's a declining structure. So I will want to see how we react to that. Again, that's the same type of action that I will look as last week. Do we retest and reclaim? In which case this is very constructive and we'll wait for the back test to engage. Or we retest and reject. And if we reject, that's still very normal price action. What do we do next? Do we form a higher low on the right side and we build constructively? Or we roll over? And we could really well build a very tight range on the right side as the 21 DMA structure catches up, and then we'll set up a very nice setup in the next few days and weeks. So that's all the scenario that I will look. A gap up into a declining structure again is not good risk reward ratio. If you engage hard here, it could work. You can go away with it. You can open big exposure and then it works. But over time, you risk to take more far losses and being chopped up than working and making it big. So again, that's my setup. That's what I wait. I'm not saying again that that's what you should do, but that's what I will wait to see. The other thing that I wanted to show you, let's go to TradersLab. Sorry for that. Still working on it. So we'll want to see net new lows start to expand as well. That's another thing that was a red flag last week, and Friday we still had more net new lows than the prior day. So we have an acceleration of net new lows. Probably that it will improve today with that gap up. And Friday opened very weak. So that always hit net new lows because at the open we make a lot of net new lows, and then the stocks don't make new highs. So usually see that expanding. But as we go into this week, and if we start to see constructive price action around the 21-day MA structure, then we'll want to see that improve as well, and not accelerating to the downside. Uh, Breadth extension, that's pretty constructive for an oversold bounce. Again, price is below a declining 21-day MA structure. So when that happens, I'm not playing those oversold bounce. I want to play them when we're in an uptrend, when we pull back hard into a rising 21-day structure, like on July 16, like on October 11th. So that was oversold condition that I wanted to play. Now that we're below a declining 21-day structure, I don't want to engage in those as I treat them as oversold bounce in a short-term downtrend until it change, right? So that's the first thing. So let's say where it goes with that gap up. Probably we will get pretty neutral with that open, and we'll need to see if that continue further. And as we get into overhead supply, and we are short-term overbought, it just reinforced the fact that it's not a good spot to engage. The market is running into resistance and it's already overbought. So you want to wait for that to cool off after that gap up, after that retest of overhead supply. And other thing is, again, McClellan summation. So that's another thing for me. So I don't want to engage with price below daily structure and with a declining McClellan summation below a 10 DMA. And the 10 DMA starting to shape down. The McClellan summation is in a downtrend as well. So we had an oversold condition as well on the McClellan oscillator, and that's the oversold bounce. So do we need to chop around like in March? We can form a higher low, which would kind of create the price reclaim and backtest setup with that higher low on the MCO. But either way, price is below structure. McClellan summation is in a downtrend, meaning that breadth is still contracting, but we're approaching an oversold level. So I want to see where that goes. Where do we stabilize? Where do we start to see the McClellan summation to round up and start to hook up as well? That will be the time to really see that market as more easy money and that uptrend to resume. Uh, Again, if you have FOMO this morning because the Friday the market bounced and this morning it gaps up, just zoom out. Zoom out, guys. We didn't even reclaim the daily structure on QQQ and QQQE. The McClellan summation is not even flat yet in an uptrend, and you have FOMO. So zoom out. If the market really confirm a new leg higher, this is so pretty early. We didn't even see confirmation of the market to turn yet. So please today, your big goal is to resist FOMO. Uh, yes, the market will gap up. Yes, there will be a lot of names that might run hard. Uh, if you engage on Friday and you're already in those names, then good for you. That's perfect. You have potentially some nice winners. But for me, the risk reward was not there. I'm not trying to catch the bottom. That's my style. I'm not judging anyone that does it. But for me, I want to wait for more confirmation. And uh, we have only a pocket of names that are still above their 21 DMA structure. So let's look at the liquid leaders. So we have those names above 21 DMA structure. We had those liquid leaders that are that were pulling back into 21 DMA structure, such as CLS, APH, LRCX, CRDO, Nebius, MDB, CLAC, VRT, etc., etc. But you still have a lot of liquid leaders that will either gap up in their 21 DMA structure, declining 21 DMA structure, such as I saw Robinhood gap up right into a declining 21 DMA structure. And same thing for PLTR. Those two names are pretty important to track. Will they gap up into a declining 21 DMA structure and fade? Or buyers will show up on that gap up and reclaim their 21 DMA structure. So we'll look closely at Robinhood, at Palantir, and overall all the liquid leaders. They will react around their 21 DMA structure. And don't worry, we'll have a lot of names on their 21 DMA structure reclaim or backtest in the next few days if the market is setting up the way we wanted to see set up. So just want to emphasize that fact, especially if you feel some FOMO this morning. That market is not overextended, is not overbought. So control your FOMO, and we'll be there in the next few days if we have the action that we want to see. All right. Is there anything else to? So again, I don't have a focus list, simply because we're getting right into the declining 21 DMA structure and QQQE and QQQ as well. And like I said, I don't want to engage at this spot. I want to see first if we reject and form a higher low, if we reject and roll over, so a new lower low, or we reclaim that structure, and in which case that's very constructive, and I want to see the back test to engage. Alex, these PMS are so good. Love your way of thinking, so calm and composed. Thank you. And let me tell you that just because of experience, of also having a system and rules. If I didn't know what I wait for around the 21 DMA structure and with the McClellan summation, I would have a lot of FOMO this morning. And a few years back, that would be a morning that I would load the boat, chase, take big exposure, and then if the market gaps up and go, then reinforce that action. And if it fades, then I take a huge loss and dig myself into a bigger drawdown. So again, I'm already in a drawdown. I don't want to be a cowboy. I don't want to be too risky. That's also a part of me where I want to see more of the action. Earlier this year, I was more aggressive. But right now, I want to protect my triple digit year. I want to protect my drawdown as well. So there's that. You don't have to always trade pedal to the metal and be super aggressive. Later in the year, if you want to take it easy and just secure your triple digit years or a good year for you, maybe it's 25-30%. I'm not judging. Maybe it's 250%. I'm not judging. But yeah, that you don't have. I understand there's some competition, especially if you go on X or you compare yourself to other traders. We want to compete. We're built like that. But think about creating wealth. Do you really have to risk it all each time the market pull back? No, you don't need to. you have a good year, take it easy. Take smaller position, test the market, uh, grind higher your equity curve. But you don't need to go big or go home each time. That's very important to understand as well. We're not in a race. This is a marathon. Yeah, that's a good point. You don't compete with the others, you compete with yourself. All right, any questions, guys? Again, we can review kind of the names that are still setting up, but again, I won't engage in those. But those are the names. Uh, I use exclusively that liquid leaders daily structure pullback setup scan. Uh, that's my go-to. That's my execution, and I've tailored that so precise that I could even not make any focus list the night prior and only take those names uh, by RS during the day, intraday. So CLS, good setup. You can look for a daily reversal. Same thing for CRDO, but it's gapping up 5%, so it's gone. CLAC, nice setup at the 21 DMA structure. Snow, you can look at the daily reversal. And if we gap up, you can look at the retest of that pivot as well. Net, pretty big pullback, but right into structure, right on that retest of base structure as well. You have IBM, tight flag at the 21 DMA structure. HAP, it was showing pretty good relative strength in the last 2 days. Nice setup at the 21 DMA structure and good kind of low cheat range as well in the last few weeks. And Intel is shaping up nicely at the 21 DMA structure as well. So again, if I see what I want to see on the market, then you will start to see me take some exposure using that scan, but I'm not there yet. All right, do you have questions, guys? So AG is asking, what's max allowable gap on a setup for you, assuming you wanted to buy? And remember, for me, market is first, right? I won't engage in any name, even if the setup is good, if the market is not setting up for me, right? That's very important. First step. Then let's switch to trading view. So let's take I don't know, VRT for example. No, Snow. So for me, I have a distance from the 21 EMA as my criteria, right? I don't want to see the stock above one time ATR from the 21 EMA to engage. That's built in my scan. That's built in my indicator as well. I don't want to engage if it's more than one ATR from sorry from the 21 EMA. Then if it's gapping up, I don't want to just buy kind of the gap and the hair. I will look for some pivot to be retested. So in the example of Snow, for example, I always look at the daily reversal pivot. So in a downtrend, the prior high, which is kind of the prior lower high in the structure. And for me, that's the pivot to reclaim, to confirm a new higher high attempt in the shorter term structure. So if we gap up above, then I want to look for a retest of that structure or even a retest of the 21 EMA structure. And if we get that, then I consider it as being a good risk reward setup. But I don't want to engage up there in the air. Yeah, so that range looks a bit choppy, to be honest. Yeah, it looks like a hard name to trade, to be honest. Looks very choppy. Um, that would definitely not be in my focus list, simply because when you zoom out, there's like no trend. Maybe the story changed last year, right? So we kind of broke out from that IPO base. We had a big base breakout here. And that's kind of the first 21 EMA structure pullback since that breakout. So yeah, it could work. But there's wild range in the structure. But yeah, if you know the story and you're interested, there's that daily reversal pivot or retest of the 21 EMA-ish area that could be actionable. Uh, American Eagle. Yeah, you have that's very typical Mark Minervini low cheat uh, entry. So you have that downtrend, and that's what I call a 21 DMA structure reclaim and backtest setup, right? So you have that reclaim after that downtrend, you have that backtest, you have that higher low structure, and then you have that range breakout on the way, and you had that daily reversal pivot reclaim on Friday. So yeah, that's a nice setup. Yeah, so Big Wave is saying that if you struggle with FOMO, you can wait for the 30-minute or 1 hour opening range breakout. So it means that you take the 30-minute bar or 1 hour bar and you wait for it to close. And then on the next bar, you can engage on the reclaim of that bar. That's not something that I use. I'm more I'm only using the daily chart, and I like to buy backtests of structure and pivots. But that's a good way to control your FOMO. If you want to engage today, despite everything that I explain at the market level, if you still want to engage, that's okay. That's you. Um, but yeah, that's something that you can use. There's so many indicators, that there's so many hedge, there's so many rules and systems and setups. Just find what works for you. If that's something that works for you, then use it. And the only time that I engage, I try. Okay, sometimes don't quote me on that when I do it, but what I try to do is not to engage at the open on strength. If you get a weak open and you get kind of a flush into a rising 21 DMA structure, or a weakness into a structure in the market, then I will look to grab that weakness at the open. I don't care to trade the open, but it has to be on weakness, not on strength. Uh, a gap up open has more chances to be faded than to run away. You just have to understand those HUDs. And there's a lot of volatility, a lot of noise around the open. So if it's not about catching support, then that's a hard time to trade. For the reclaim, isn't an increasing MA only supportive or a kind of necessity? Udo Trading, can you clarify your question? I really don't understand it. Sorry. Yeah, that good question. I was waiting on it, but it kind of became a non-event. So yeah. So you had earnings, and earnings. They didn't talk about it or anything. Uh, so I was waiting for that to resume. I didn't trade that in that area, but now that earnings are behind and kind of make more than 1 month from that news, kind of just ignore it at this point. But yeah, maybe it's still hanging around. I don't know. LPG. I'm not talking about 30-minute chart in my Gitbook. In my Gitbook, I say that I only trade the daily charts. What you might refer to is to wait for the first 30 minutes of the day of the open to clear before trading. And yeah, that's something that I try to do very often, but I'm not trading off intraday charts. I think you misread that. Like the chart just before, the MA is still down, but the price moved above. What chart was that? American Eagle? Oh, SE. Yeah, probably this one. Wait, this one is still rising. What did we talk about that was still sloping down? This is rising. Ah, this one? VRT? Oh, American Eagle. Yeah, it's that chart is the 21 EMA is sloping higher. It's not in a downtrend. It was for a day here. You see that 21 EMA is pink, so it was down, but now it's up. Oh, okay, in the structure and pivots. Yeah, I was using intraday chart before. I'm not anymore. So in the main Gitbook, you see that I only use daily charts now. That's something that I removed in my system in my trading to kind of remove the noise. But yeah, I left that education post unchanged just because it was part of the explanation of structure and pivots. Yeah, so meet Budget sleep is asking. That's a good question. Since now you are full in cash, are you planning you to use progressive exposure? Always, always. That's not even a question. So how much open eat next net exposure risk of capital? So that's very good question, and that's a good reflex to ask about that risk, because it's not about the exposure in itself. That's about the risk. So usually I tend to risk on a very good market opportunity around 1 to 3% of new exposure risk. So 1 to 3% of my capital. But now that I am in a small drawdown below 10%, that's still very manageable. That's not a big issue for me, but still in the back of my mind, and that I'm not totally convinced about that market setup. So right now I'm not seeing what I want to see, right? I'm not engaging today. But when the setup will be there, probably around 1% of capital. And if I get traction, meaning that if I get cushion on that new exposure, then I might bump it to 2% max, and then I want to see that to de-risk, to hit some 2 or 3 hour target, and then to increase my exposure from there. So I always use progressive exposure, sometimes more aggressive than others. If we are out of a correction and we pull back into a rising structure, and I have everything that I want to see, then I can go hard in the 2, 3, and a bit more of new exposure risk. But right now we're late in the year. I'm in a drawdown. I want to protect a bit of my good year, so I don't want to risk it all again. So I will be more in the 1% range, personally. And that's always based on my situation, my trading. Uh, and again, Prime Trading is not a trade copy service. The goal of this community, the goal of Prime Trading, is to show how an experienced trader, I've been doing that for more than 10 years now, uh, how I'm trading, what is built into the thought process. How do I trade? Where do I manage my risk? And sometimes it's external reasons. Um, if you want to trade like a robot, then build an algorithm. Um, I'm a discretionary trader, and sometimes decisions and risk will be based on other factors outside of the chart itself. And that's perfect. And that's what I want to show as well in Prime Trading. All right, guys, last question. Yeah, market opens in 3 minutes. So thank you, everyone. Have a good day. Take care. And just remember where we are price wise and what is a good risk reward spot. And I wish you a very good day. So take care. And once again, if you have questions, I will be hanging around even if I don't trade. I will be around. And if you have questions, don't hesitate. All right. Cheers, everyone. Have a good day. Bye bye.